And right now, folks, we're going to talk to our man Tim Ord, as we do each and every Tuesday and Thursday at 3:30. And folks, you can reach Tim at his website, ord-oracle.com. There you see a picture of Mr. Ord. And over at TFNN, hit that services tab. He's got a couple of great webinars. The Secret Science of Market Tops. You can check that out. 90-minute webinar with our man Tim Ord for $149, and the 6 secret ratios every trader should know. Tim talks about some of those ratios when we talk to him during these segments. And I was thinking about some of those ratios as we got a VIX that's spiking a little bit today, Tim, and markets slightly in the red. Good afternoon.
Good afternoon. Good afternoon. Actually, let's start looking at it's kind of a dollar drop market. This is probably the worst trading time of the year, is this kind of September, October time frame. I mean, it can actually kind of chisel down or chisel up, but I'm being careful here. We were long, I don't know, last week we got out for a minor gain, but anyhow, this is the 10-day arms right here. We're at 0.88, and which is not ideal. You know, normally you like it up around 1.2, up in this vicinity, but I just wanted to mark the 5-day did get down there below 0.8, I think it was, but it's not enough panic in the market to really drive the market higher. I mean, it can, I'll probably get a signal later this week, if not really next week, but it'll be another minor bounce. It's not like a rocket ship to the upside. I do think that's coming, and I think that's coming later this month, but not now. So anyhow, I'm neutral. I don't think the decline's going to go far. Here's another, actually kind of a bearish indicator. The bottom window is the 21-day average of the equity put call ratio readings. This is actually the 10-day. You can't quite see it. This is a 5-day trend, or the 5-day equity put call ratio readings. You get readings below 0.55, which all three of them are. So that's a 21-day, which is a month. You got a 10-day, which is 2 weeks. You got a 5-day, which is 1 week. And so everybody's kind of just feeling good to the upside, I guess. This is the week before option expiration week. And this week is usually whipsaws are common. Next week is expiration week, which normally has a bullish bias. I do think we're actually going to bounce during expiration week. Probably not this week. This week's probably kind of what you're seeing, maybe a little bit lower, but not much. I don't think anything big to the downside is coming here. But to really get the big rallies going, you really don't have the equity put call ratio readings this low. You really need them at a higher level, preferably, up in this vicinity here, which is, 0.7, 0.8 up in that range. And that's where you start cooking to the upside. And I think that's going to come. But right now, I don't think it's worth the short. I don't think it's too soon to buy yet. I think you got maybe a little panic later this week. Do I have a chart? Here's another bearish chart. This is the SPY VIX ratio. Even though we've gone up here, that ratio is kind of going down. I think this whole thing, my opinion, this is the S&Ps right here, the middle chart. I think we may go down a little bit, maybe more, not much. Then we go up, maybe break a new high or something like that. Then seasonality, there's I forgot it's another trading method. I can't remember the name of it right now, but it kind of looks at past history going into the current time, like in the current time frame. We've been up, I think it was 5 months in a row, and there's other statistics to support this, but the week after September expiration week, if the market was up 5 months in a row, the week after expiration week, normally a big slap in the face to the downside. And that's the one I'm kind of concentrating on. I think we probably could go down pretty deep. How deep's deep is hard to say, but I think these two lows down here could be touched. Somewhere down there, 550, 550 range or somewhere in that percent, or 650 range. I think that's in that vicinity. So this is expiration week. I think is up, which is next week. I think the week after that is the big buying opportunity somewhere in this vicinity here, where we go back up and we break to new highs. To get that type of rally, you're going to need the trend, the 10-day trend, somewhere in the preferably 1 point, I don't know, at least 2.0, if not higher. I'm thinking that's what we're coming into. Between now and then, it's a minor decline probably this week, a decent, maybe a 1%, 1.5% rally next week, then probably a 5% pullback. I've been getting kind of mixed up here. Things may change as going forward, but I think the trade to concentrate on is the one coming later this month, somewhere between 20 and November 1st. And that's the one I'm kind of concentrating on. I'm kind of like not stepping into anything that's really, unless it's really obvious. So anyhow, that's what I'm looking for. Nothing really this week, maybe a little bit more deep. The trend will probably pop up later this week to 1.2 or whatever. Probably not get the trend, 10-day trend up where it needs to be, but I'm going to trade it anyhow just because it's a 1% trade. I'm tired of kind of sitting on the sidelines. And maybe I'll get a good sell signal after the week of expiration week, maybe not. If I don't, I'm really concentrating on the late October bullish setup. That's my intentions right now. So how that works out, don't know. Kind of this September rally kind of surprised me, but because we're up 5 months in a row, that's really a bullish statistics. You have to go back. Actually goes back 40 years, and the probabilities of a big rally coming at towards the year end is really high, and that's the reason why I'm kind of concentrating on that trade. So we can flip to the gold market.
I appreciate you just going through it so detailed, man. And, I don't know if you heard Basil at all beforehand, but he was kind of talking about just how to protect, some of just been such a run that, I'd agree that, I think we're all kind of thinking, at some point it's got to breathe a bit. And it's not like, we're talking about, everyone's, of course, bringing up .com bubble, and it is a different story for sure in terms of some of these companies, the driving force of the revenue behind some of the AI bets. But boy, we're up right now. I mean, the NASDAQ 100 off the lows, let alone the year. We're up like 20% on the year, let alone from the April lows. So maybe a little breathing. With that, let's take a quick break, and then we'll jump over to gold. All right, gold hitting 4,000 for the first time. We're coming back with our man Tim Ord. Don't go away, folks. Welcome back, folks. We're talking to our man Tim Ord. Don't forget, you can reach Tim at his website, folks, ord-oracle.com. And you can check out a couple webinars he's got under that services tab at TFNN. And we're jumping into gold. And the run continues, Tim. $4,000. $4,002. What do you think about this gold market, man?
Oh, there's a change of character. I forgot who coined that, but it's a really important. What that says, what indicators in the past have worked and they quit working, that means there's a character change in market. So what has worked in the past, in other words, of all what the market was doing before the change of character, correct? How to explain this? When the change of character changes, it changes the dramatic, or the changes the market dramatically. I'll put it that way. So whatever was working in the past, where the market was in a trading range, it'd peak out on an RSI of 70 on a high on a monthly chart, and it goes back down, it goes below 30. That quits working, and for some reason the market continues higher. Then that implies, in my opinion, the market was in a trading range from basically this chart here from 2011 to 2025. It finally broke out of that trading range because the character of the market has changed. And one of the reasons I actually went short, and this is one of the charts. Where's my little? All right, is bullish percent index for the gold miners index. Previously, from 2011 up to 2025, every time it got up, or actually 2020, every time it got up around 95%, bullish percent index. In other words, bullish percent index measures the point and figure bicycles in the stocks in the gold miners index. So 95% of the stocks in gold miners index were in buy signals. When that happened, the market was at a previous times intermittent term highs, and I pointed those out, right here and right here and right here. And this is one of the reasons why I actually shorted here, because the bullish percent index got it 100%. Well, that happened right here, right around the 50 range on GDX. And here's another signal that I took. This is the GDX monthly RSI. And I pointed out the previous signals, every time it got up to around 70, it was a high. So I usually have at least two indicators that give the same signal. This gave a sell signal because it got above 95%. And I use a totally different indicator to come up with another signal, not using anything similar to the bullish percent index, and that's this indicator, which is the monthly RSI, which hit 50 previous times you get it. And the same thing happened, came around 50 range, right in that range. Well, both markets just kept on going. So that's a change of character in the market. That's my point. I actually even have a couple of other indicators. One is the RSI on the GDX GLD ratio got up to around 70 also, and all of them failed. And that's really unusual, but you got to go with, if you get failed tickets, that means that the indicators didn't work. They just previously worked. Now they don't. You have to find some new rules of indicators. So you got to really look at the bigger picture, what's going on. And this is what it kind of prompted me. The previous one I had in the last show was last Thursday. I was doing the GDX QQQ or GDX NDX, I don't remember. This one goes back further. That's the reason why I wanted to point out this is the XAU. Yeah. So it happens. So I got another cycle in here. Ideally, they said you should have 20 cycles. Well, market sometimes doesn't give it what you want, but this is the same 12-year cycle. And so it's on the XAU. It comes out similar. We didn't have this information on this one here. It peaked in, it looks like 1988 approximately. And the RSI is kind of what you want to look for, because the RSI was bearish all through that 12-year period, bullish in this period, bearish in this period, and now we're back to bullish on this period. In previous times, you had 12-year cycles. So I'm thinking something big's going to the upside here. And you got the actual government, over the last actually 12 years, the government's kind of been bearish about going in and digging up land, digging out the minerals, because that's bad for the environment, my opinion. And I think the markets have opened up again. So now you can actually go drill for oil, you can drill for minerals and all this other stuff. So the environmental people are kind of pushed aside, and now opens up these, I think, this is my view anyhow, of all we can dig minerals out of the ground now, we can, go for excavating for oil and all this other stuff. And I think these type of commodities going forward are probably going to do pretty good as a lot better than they did in the last 12 years. So I'm thinking the doors are open here, and these markets are in the early stages of a great bull market that I think could last 12 years. How we doing really short term here? This is a short term chart. This is where we are right now. This is the bottom window is the daily, or actually the 15, this is a 15-day average of the up-down volume. The next higher window is a 15-day average of the advanced decline. And anything above, or actually anything around 30 is really good. Anything above 20 is good. They get bearish when they fall below minus 10. And that's way down here. So even though we've been rallying here, these indicators so far are pretty much holding up fairly well. When they get below get around 0 and below, you got to start watching out. But we're not, so far we're not. So the internals I'm saying here still look really good. Nice. Can we keep on rallying? I don't know. The market's super extended, but this is a momentum indicator on up-down volume and advanced decline. So momentum is up. And if you look at another indicator here, which is I'm up there. Let's look at kind of a bigger window. This is the 15-day average of the up-down volume advanced decline indicators. So this is a 50-day advanced decline and up-down volume indicator. And up-down volume, for some reason, works a lot better than advanced decline. Don't know why, so I trigger off of that. But last time we got these indicators close to 30. Now, this is a 50-day. This is a 50-day average. So your tech, there's that's almost 3 months, 2.5 months of data. So it's a kind of a big indicator. It takes quite a bit of big time. Anything around 30 is really good. And we moved up the last time we talked about it, I think it was 31. We're over 32 right now. And so previous times, we got the signal right there on this one, and it still went up another 5 months after that. This one went up another year. The signal came a couple of weeks ago, maybe a week ago. We're actually still rising, because last week we were 31 and change, now we're 32. This is still going up. So we actually haven't even hit the peak yet. So does that mean we have at least another 5 months to go? I would say. So, people are not, they're looking at the gold market here and kind of just wondering. I'm thinking, well, this is too high to buy. And according to these indicators, no, it's not. So
yeah, and we people have been saying it's too expensive, right? It's from 34, 3,500, 36. So in the same mentality, man, quite a run, 4,000, and that's with the dollar doing pretty well since August at least. As gold's plowed higher from 3,400. Tim, thanks so much for the education, the conversation, man. We look forward to talking to you on Thursday.
All right, sounds good. Thank you.
Okay, take care. We'll come right back, folks.